Welcome to day 2 of the 25 Days Nigerian Tax Reform series. If this is the first time you're coming across my videos, my name is Tamna Nimitekena and I'm a business and corporate lawyer. I've decided to host a 25 days tax reform series this February 2026 to guide businesses and give them tips on how they can arrange their taxes and understand the tax law better without going into a frenzy. So, for today, day 2, let's start. Because of the topic I want to treat today, I want to talk about a very sensitive topic that we always talk about in Nigeria. If you're of the school of thought that, oh, the rich are always favored when it comes to taxes, they don't pay much taxes, but poor businesses or the poor are not favored. I would say that you change that school of thought because there is something that the rich know and the rich do that you, as a startup or as an SME, you don't do it. And what is it? Tax arbitrage. Yes. Tax arbitrage is when you look for the loopholes in a particular law under a particular jurisdiction, under a particular country, and then you use that to your tax advantage. Now, this is not favorable for people that their finances are not much because it requires enough capital and it requires some factors to be considered. Number one, lawyers. You have to pay tax lawyers to look for these loopholes in the other jurisdictions. Number two, you're paying tax consultants. You're also paying investment bankers. You're paying brokers and many others. The rich can afford this. Those that have big businesses, conglomerates, groups, subsidiaries in other countries. But you don't have that. So they make use of this tax arbitrage. So anytime you want to go into a frenzy as to, oh my God, why is it that me, I'm forced to pay taxes? If you can afford what they can afford to get this, then believe me, you will not pay the amount of taxes you think you're paying. Now, that being said, let's go into today's topic because there is a hint of this in what I'm teaching today or what I'm talking about today. So, yesterday, we learned about the four new acts: the NTA, the NTAA, the NSR, and the JRB, Nigerian Tax Act, Nigerian Tax Administration Act, Nigerian Service Revenue Act, Joint Revenue Board Act. And I also stated, you can go back to watch the video of yesterday, what each of these bodies represent and what they do. Now, remember I said something about tax arbitrage and why you should not look at that because you don't have that leverage yet. If you are looking at that and you do not follow these bodies, these things I have written out here, they would be the undoing of your business, unfortunately. So I want you to follow me while I explain them to you very well. Like I said, under tax arbitrage, if you have the finances, you have the funding, you can be able to get some of these leverages that you think. But if you don't have that yet for your business, please focus on complying. Focus on complying because what I've stated here are the consequences of not complying. Apologies for my writing, I wasn't blessed with a good one. So the first one is misclassification of your income. If you put your income onto under another thing that is not it, at the end of the day, you will be seen as underpaying, and then you will have to be double taxed. It leads to underpaying and double tax in taxation. The second is failure to declare royalty and dividends. Dividends is like the interest that is gotten from a shares or stock that you hold. So let's say you hold a stock with Apple and they pay dividends. That dividends, there is tax on that dividend. I'm just saying generally. Now, royalty. Royalty is intellectual property, license. If you give somebody your license, your trademark, your copyright to do something, you give that person the license to use your trademark, your copyright, or your intellectual property in the mining industry, in the petroleum industry, in the telecommunications industry, even in the pharmaceutical industry. They are much. If you give the person that, what will come out from it for you is royalty. If royalty comes out, you will have to pay taxes on it. If you fail to pay taxes on it, it would attract withholding penalty. Now, that is another fine for you to pay. Now, there's capital gains error. Capital gains is basically money that you get from selling an asset that you own. So your asset can either be tangible or intangible. Tangible are things that you can see and hold, like houses, lands, moving vessels. Those are tangible assets. Intangible assets are stocks, bonds, commercial papers, treasury bills, etc. When those things come, you need to pay taxes. There's something called capital gains tax. If you fail to pay capital gains tax as at the time you are meant to pay, because mainly you get the money from it, that's what you're meant to pay, it is going to trigger fines for you. So your business will pay fines. Now, you see the consequence of doing this and more under the NTA is that you will pay all the back tax and the interest, because interest will accrue. You will pay all the back tax. There's something I'm going to teach us later on in the coming days, VAT. The VAT payment, their fines are prorated, but that will be later. Now let's come to the NTA. On day one's video, the thing I said about NTA, that's the Nigerian Tax Administration Act, is that they are the ones that tell you how and when to do a particular filing. So if you miss the deadlines, you will pay penalty, like I've said. So if you miss the deadlines for any of these things and more, you will pay penalty, late penalty. If you do it in a wrong format, that's why you need to be versed in it, or you need to get a team. Remember yesterday I talked about assigning tasks. You need to get a team, somebody that is going to be responsible for these things. It will be rejected, and if it is rejected, you will have to redo it again. And what if it is rejected and you were not informed on time? You understand those things, so you need to ensure that you do it in the right format. Now, payroll of employee errors. If you make any errors in the payroll of your employees, guess who is going to be responsible? The employer. So the employer can be a business name owner, that's a sole proprietor. The employer can be a company, that's the shareholders will not be the one paying, the directors will not be the one paying for all these things. So you also need to be careful. The third one is NSR, Nigerian Service Revenue. Nigerian Service Revenue, like I said yesterday on day one, is that they are the online filing app. Formerly, they were known as the FRS. So yes, they are still operating as the FRS, but the act that gives them the power is the Nigerian Service Revenue. Now, if you fail to file digitally, they will not accept your paper, because there are some things that they do not accept paper for anymore. Number one, your VAT, your sales tax, those things they do not accept paper filings of those things anymore, and some other things. Invoicing mismatch. Your invoice will not be logged into the system. You would think that it has been logged in. It will not be logged into the system. And if it is not logged into the system, it's futile, because if you don't know and you log out, that month will be counted for you that you did not file. And what comes in? Penalty. Okay, so you need to ensure it is done properly. Then system audit. If you go and audit something in the system where your bank statement is showing something differently, the system will show it, and you'll be held as a fraudulent person. Now there are consequences under the NTAA. The first is that your business may be blacklisted, especially if you keep on doing these things. The second is that you would lose access to government contracts. Now, so to note, there are some documents that you need before you can get government contract. As CAC and FRS, you need these documents to get access to government contracts. BPP, that's the Bureau of Public Procurement. NSIT, the Nigerian Social Insurance Trust Fund. PENCOM, the Pension Commission. ITF, Industrial Training Fund. SON, Standard Organization of Nigeria. Now they are saying that even if you have all of this and then you do this and other things under it, you will still not get access to the government contract. Now the last one is the the Joint Revenue Board. Now yesterday on day one, I said that the Joint Revenue Board is responsible for the cooperation of the federal and state laws when it comes to businesses. They check if a business has complied to federal, state, or both laws, depending on the type of business. Now, under the GRB, if you fail to report to federal and state, if your business is supposed to be paying taxes to federal and state law or reporting to federal and state, if you fail to do that, your business will be seen as defaulting. And if your business is seen as defaulting, you will pay penalty. Now, the next one is not ensuring that your filing is accepted by both the state and the federal. Maybe you're done with your state, and then you just get tired and you say, next time I'll do for the federal. There's a consequence to this. Hold on. Now, the third consequence is if you fail to state your contracts. Maybe you get contracts from the federal and the state because of the type of business you run, but you're declaring your taxes of only state, or you're declaring your taxes of only federal rather than declaring the both of them. There is a consequence to it, because there will be double penalties for both. You receive penalties from both the state and the federal, regardless of if you have declared the taxes, or if you have fulfilled your tax obligations to either of them. If they find out, the both of them will still fine you. Now, the consequence for all of this under the GRB is that you will keep paying penalties to both the federal and the states. And that is too much for a business to be doing. So these are the consequences. These are like the blanket consequences from these bodies. You see that there's a correlation between all of them. Like I said yesterday, you can't do without either of them. They all work jointly and severally. So you need them together and separate. You need to know them. So that's all for today. Yesterday, we talked about the different bodies. Today, we are knowing the consequences of not complying to them and knowing that they can hold you jointly and severally liable for failure to follow tax obligations. So thank you for joining in. And as a gift from me to you, yesterday I mentioned 3 fixes that you need. And one of the fixes was you mapping your activity. So what I'm going to do for you is to show you or send to you a compliance map for you to know how you can map your activity. So if you're interested, just indicate in the comment section and say that I want it. And I will send it to your inbox. But thank you for joining in today. Tomorrow, day 3, we're going to learn about e-invoicing and other things connected to it. So for today, we're done. See you on day 3. Bye.